All right, what's going on, guys? So we're going to be going over the trades that I took today. I'm going to go over the market and kind of that whole entire NWOG setup because it's very important to talk about like NWOG setups and how we get the new week opening gap up from this Friday close into the Sunday futures open, which was a gap up this week. And that's very important to understand with data like mid to end of week, right? Because typically what it is it's manipulation beforehand into basically like it's a gap up, and then what they do is they typically accumulate and then will reevaluate and distribute or accumulate off of those data sets, right? So we had CPI today, and then whenever we take a look just at like the hourly chart, let's take a look at the hourly chart. First of all, we had some gaps from over here, but the bigger perspective of this whole entire chart, guys, is the fact of this being a very, very critical level on a daily scale here, right? This is a daily chart. This is where there was a ton of consolidation, a ton of liquidity is built off of this general range. There's a ton of money built here. And then as you guys can see, whenever we push up, we retest back into the range, and then we put a hammer candle on a lot of volume that led us into a nice, really nice trend higher in a very short amount of time, right? It got very it got very, very, very like volatile and clean and smooth to the upside. This was a 13% up move in 26 trading days or 40 days total, right? That's very good. So whenever we look at this and we look at these gaps from over here, I just want to talk a little bit about the context of the chart. This is a gap fill followed by, this is an NWOG, right? So what they did was they gapped this down, they pushed it for reaccumulation, then they micro distributed it right into data, and then they reaccumulated it once again, right? So gap downs are typically reaccumulations, and then gap ups are typically redistributions. However, the market's in a very weird spot in time right now where um, something very, very, very important is coming to the market. It's going to be hitting the market. The market's going to be pricing it in. And whenever we get the data sets beforehand that are trying to price those things in, there's going to be a lot of volatility. There's going to be a lot of size within the tape, right? So this is going to be the first rate cut that we have for the here pretty soon, like next week. So yeah, volatility is going to be great, right? So whenever we're looking at this, we'll go to the 15. This, first of all, big retest, right? Huge, huge, huge retest. Sorry about that. Huge retest right over here, right? So you never want to short the hole leading into the end of the week on a Friday with the candle closure, even looking like that. That's just against my rules, right? And then the next following week, we get a gap up. Here's the opening print of the gap up. And then what happens here, guys, if you go into the 15, this was a really nice gap up. They filled almost all of the gap. There was a little bit of the gap left. And then what they did was kind of just establish a support off of this range, right? So if you take a look at Qs, this is kind of like where the gap is, right? It was kind of just established with CPI coming out this morning. They redistribute, and then that's whenever they went into a big accumulation, right? I feel like that caught a lot of people off guard, but basically what I caught and what I'm talking about is how here's your gap up. Okay, so there's your opening print on Monday, and then what they do is they kind of hold this as a general range of support, and then from there, once the data comes out the next following morning, we absolutely plummet and capitulate right off of it. We fill the NWOG, and then that's whenever there is a bigger picture accumulation kind of happening here. If you look at this as simple as just the simple, like the gap that was lost, the gap territory from right over here that was lost, it was a really nice spot to start thinking about a risk and opening up some shorts. So that's when I opened up my short side vehicle. That is my favorite by far. That being, you guys should probably know, you guys should probably know. Um, if you guys don't know, It's Netflix. Okay, so I talked about the bigger picture of like a daily failure here. So this is more of like a weekly distributive chart where it's kind of starting its higher high distribution right back into the swing high of over here at 2000, in 2021. So this is the all-time high, and then we started to fail the all-time highs. We never got a weekly candle closure strong above that previous all-time high, right? This was an inside week. This was a failure. And then whenever you look at this, I caught the short here. I held it on these two inside bars, really low volume. Look for this for the third sell. That third sell happened right into this leftover little mini bear bull gap, and that's where we started to obviously establish our support off of. However, this chart doesn't necessarily look so great, right? Especially whenever the market looks like it wants to fall. Okay, so we had a low from right over here. This is our current like swing low that we have. Whenever you go into the 5, what this was kind of doing was just consolidating on really low volume while the market was really weak right at about 10 a.m. Um, so that is whenever I was short tech and just this one. So as you guys can see right here, alrighty, so this is, I'm sure you guys can see what tech name I'm short. I'm sure you guys can guess what tech name I'm short on. I was at 944. So whenever I saw the failure right off of the open, I caught like some nice little retests over here. And then if you go into the extended hours, I was kind of just looking for like a push beneath the pre-market low. That's exactly what we got. And then I was targeting actually beneath this low. Keep in mind, guys, these big candles over here are sometimes a nice draw, right? And there's actually a hitting gap here that was that the overall auction was actually fighting over for several weeks on end, and then once they finally got it through, they retested the top and then took it higher. It's this big gap here on the hourly, right? I mean, not necessarily a big gap, but you guys get what I mean. It's the earnings candle. They're always going to try to establish a support or resistance off of like an earnings candle itself, right? So scaling into new lows here is never a bad idea. The trade ran like 70%, and I was basically just bearish with the overall market on this being distributed based off of how the NWOG setup kind of works and how this was kind of getting that slight accumulation back into these retests. And then keep in mind, guys, if you go into like the hourly chart here, this was basically just where a lower high would be, right? So if you go to like the 15, take a look and mark it out, go to the daily. I guess I didn't really need to go to the 15, but first of all, you have a couple confluences here. The massive, massive gap, right? So this was right off of this disgusting gap that was like the one that had a lot of people concerned. And then this was also right off the upper ranges of this sell candle itself on Friday. So I figured to myself, okay, they're probably going to defend the Friday candle. This was like the opening range and the high of that Friday session. And then that's exactly where we opened, followed by a really nice sell, right? So with that being said, I mean, there was nothing too crazy there. And then I also overnetted what was it? Roku. I almost said Roblox. Alrighty, so Roku was a growth name. So here was the Roku and Zoom trades. Zoom. Alrighty, so the initial plan here, guys, was to long Roku. Real light size, I'll swing with some leeway. No weeklies, just picking up some momentum on this. Closest I grabbed was 10 DTE. So whenever we take a look at this, I swung it right over here, swung both, cut down some size on one of them, and then we got a really nice gap up before the CPI report. I swung them with lighter size because I knew that my whole entire like NWOG redistribution for early week could have been the case, right? So I had to be a little bit careful here because I thought we could kind of pull back one more time for a bigger perspective of accumulation. This is a really bullish looking candle, but I'm not going to fall for it just yet. However, when we go over to Roku, this thing has been consolidating within this heavy volume break of the creek candle through this massive resistance at the 66 psych for a very long time, right? So whenever you're looking at like an accumulation that is kind of finding itself the expansion, it's not always going to just like continue. It's hardly ever a good trade setup if you're trading something towards the upper ranges of a candle, unless it's had enough digestion to the point where, okay, yeah, this is reaccumulated enough, and we have enough working for us here to the point where we can we could maybe chase a trade, right? But that wasn't ever really the case with any of my that's never really the case with any of my trades. Um, so I did take a loss on this candle because it was heavy volume, increased volume, and then from red to green into close, this was a really nice looking kind of like close. There was a lot of volume off of lows. It actually took out like this bigger area of interest, which was like the $64 spot, and then it started to close back up above this level with like a hammer looking candle. It definitely didn't look bad, right? So next thing you know, it just pushes for a little bit lower beneath that spot, and then that's whenever we get a gap up. Roku actually had a really nice gap here. Gapped up. What did this gap up? And this is what really caught my eye on this gap. It gapped up about 5%, right? So a very notable gap higher. And then what happened was we could never really like claim the gap progressively and then establish a bid on top of that gap. However, the sellers looked like they were running dry down here, right? They were putting in these lower highs, right? So lower high, lower high, lower high, lower high. However, price was really, really, really coiled. There was really no activity within the tape leading into CPI, and CPI is just an event that stirs up enough size within the tape for things to really go our way, right? So whenever you're taking a look at this gap, on like we'll go to like, what even is the opening print on this dude? By the looks of the daily, the opening print's up here, right? So this was a really nice gap, and then you have structure above you, like these lower highs that are trying to be taken out, right? So when you're taking a look at this, you could just grab a level where there's decent structure of lower highs off of, because guys, with any sort of range, I always talk about lower highs. Doesn't matter if it's smaller time frame, higher time frame, and then expansion above those lower highs. We're kind of looking for a higher low or a higher low on top of those lower highs now, right? And then a continuation higher, right? So this would be the break in, hourly structure, whatever it really is, right? And then this is whenever the setup becomes a lot more valid. Once you start getting above the lower highs, establishing them as a support, so on and so forth, right? So whenever we go back into the chart, you guys can kind of see on like the 15 or the hourly how these were all a range of lower highs. Okay, so this was the opening print. This was the gap level itself of that day. And then whenever you take a look at like hourly resistance and like the seller ask on the hourly, it's like 70, 67.50. And what this did was got a really nice gap up, followed by a little bit of like a minimal sell, couldn't get continuation right off of the open. And then that's whenever we put in our higher low for the current trading day and move our ways higher, right? So very, 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 very nice constructive type of chart here. I would really like to get into that $72 territory just so this has a really nice risk reward behind it. And guys, when you're taking a look at these things where it's like, okay, I think CPI can really start to get this thing moving. Like I said, that's just an event that we have at our hands to take advantage of. You're looking at like entries down here. I would say risk would have to be established off of like somewhere within this trading day. I mean, you could take higher lows, you could take something like the opening print if like the day were to get bad the next following day, or if it were to gap down, it's like you could risk the low of day. Call it even in the low of day of risk, okay? And I actually entered this before like way before the close. So call it $1.50 of risk. I was trading September 27th and September 20th here. Um, and then give this thing a target into like 70. You're looking at a 3R already, and then my plan target makes this into like almost a 5R trade, right? So this is a really, 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 really nice trade. If you take a look at like the digestion and how this was leading up into CPI, it was really diminishing volume and kind of just consolidating with actually a double inside bar right off of the daily EMAs, right? So whenever we do gap up and then grind our way higher, that would be considered your, like I said, expansion, which just really maximizes the risk to reward. We had a little trend break here, and then whenever you go into risk to reward that's a little bit tighter, which it really wasn't because I was expecting this thing to potentially gap down, and what my risk likely would have been off of was the gap up here. So it would have been, took above, risk beneath, target back towards the highs. You're already at I would call it a 4R just because obviously that could be a little bit different with options. And then if you target into that total gap fill or into the wick off the gap fill, it's like, guys, you're looking at like a 6R or like a 5R. Okay, so definitely a decent trade there. Those are currently sitting up 160%, so I was probably risking with relatively light size a 35% loss. So I still have a third of those. We'll see what those can do. And let's go on to the next one, which was Zoom. So I also had Zoom kind of in confluence with this one. As you guys can see, just a really, really, really nice candle. If you take a look at the volume profile here, this was the heaviest volume that we've ever seen since all the way back here in 2022. 2022, and it was an earnings report from over here. Or it actually, no, it wasn't, but it was a minus 16% day with 31 million volume traded, right? And then before that, guys, was all the way like over here, 27 million volume traded. This one was like 34 million volume traded. So you guys can see this one was 22, right? So it's very, very, very notable, very, very high relative to the rest of the range. And like I said, the highest volume that we've ever seen within Zoom ever since 2022. If you take a look at the weekly volume profile, really nice, healthy candle spread, a lot of volume, followed by these lower lows that were kind of being accumulated and really making little to no progress. If you take a look at this whole entire range from April 2023 into August of 2024, so well over a year, this thing has only seen a 9% drawdown in that long. Big underperformer, but only 9% progression within 476 days, right? So typically what that means is that it's going to come down to a point where there's no point in selling this at the new lower lows. Therefore, there could be a major imbalance. And that's whenever you get really, really nice agreeing buyers to kind of step into a name. It's really hard to explain just on the fly, but basically all you really have to know with this one, guys, is that this is testing into a resistance. It's testing into like the 74, 73, $72 range. It's getting really low volume off of that in comparison to what the pop was that was leading us into that spot, right? This was taking out previous lower highs, right? It's never really done that before. As you guys can see, it's never really done that before with like really nice strong closures. So I figured this is definitely a special chart to really focus in on. And it's kind of just that growth name, right? And it still hasn't seen some of the moves that some of these other names have actually seen. So when I take a look at this, take a look at like your EMA if you really want a nice gauge for like an entry. But we had a really nice wick following into the CPI, and I was looking for a nice strong close yesterday, and that's whenever I started to fill on the bid over here. I started to take some size into Zoom before the close, really nice light size. Um, and this was a really nice move that we caught here for like 70%. I let it go back, break even on a big bulk of the position, found and established a support and a higher low on higher time frames. Um, and now we're potentially looking for a nice move. I mean, this is just a really nice light size trade, so it's not anything that's like crazy. I'm able to deal with drawdown. I'm able to experience drawdown on some of these things just because it's like, okay, I already locked in some profit with Roku. This is a lighter size trade with a bigger target behind it. And yeah, all right. So I still had some short runners as well in the morning. Really beautiful move within this one. I sized in this one literally last week, right? Literally last week, like late week. This thing has seen an almost a 9% drawdown ever since really focusing in on the short side idea over here. I already talked about the thesis on this one, so yeah, this was a really nice one. I also did take some Carvana lottos just for the hell of it. This one's like, I don't even want to talk about it really, just because it's not the greatest example of a trade. But whenever we look at this, it just looks extremely nice how we get really nice volume, first of all, with a wick on that daily candle yesterday. There was a lot of flow that was actually pouring into this one, and then bullish like call flow. And then whenever you're taking a look at like how this is finding itself a base, and then it's ramping its way higher on really nice volume. There's a lot of volume spikes within this chart, so it's a little bit weird to talk about volume profile wise on a smaller time frame. But I just had a nice feel for the tape. Growth was moving, so I was like, I'm gonna grab some CVNA weeklies and next week expiration with really light size here because I'm not a fan of trading this one, to be honest, guys. I'm just really not a fan. So yeah, that was more of like a very basic lotto based trade. So with that being said, that was it for the day. Pretty boring, but I don't really care. And then I just started to take aggressive size into Roku with profit rules as we started to trend our way higher, as we started to take out that orb range of resistance, which was really nice. I actually got in on a higher low right here. And then that's whenever I was like, okay, yeah, like if we get above the opening print, that will be the risk. And then what I'm kind of looking for is this thing to just put in a higher low, and then I would have got out if we started to not be able to hold this range of resistance, right? So it's kind of just like this, which is like this, the hourly level. If you take a look at like the hourly right here, very simple. And then you go into like the 5 and like the 15. Really nice entry points right over here. Volume started to dry up as we recovered our way back into that opening print range. We reclaimed it, and then volume started to dry up again, reclaimed it into us getting a high tight flag out off of that upper range from the morning, and then that's whenever we got the expansion. This expansion was also really nice, very clean, very easy to hold through, and it was another 2.6% move. Entries from over here was like, let me go take a look at what they were. Okay, yeah, so it was within this candle was whenever I was looking at. So this is whenever I went aggressive with some Roku calls right over here, 12:03 p.m. Here's 12 o'clock. So it was within this candle itself, actually. So this was a really nice trade where I still caught about like 3% upside on it after I started to identify that higher low off of like the hourly level. Very basic trading, guys. Not really much I can do about anything else. Really nice fade within Netflix today. Half the position stop break even. I got in like up here, caught a move all the way down into here. Really nice like $12 fade on that one. And then yeah, everything else was already positions that were existing or positions I bought before close yesterday that I added to today intraday.